Okay, I'll take that as
Scaling
an answer on your behalf. Let's go across to the management.
And energizing our core services with automation and AI is resonating strongly with our clients, as also is our approach to enhance the skills of our employees and our actions on localization in the markets we operate in. Our digital revenue has grown by 25% year on year in constant currency to reach US dollars 813 million for the quarter, which is a quarter-on-quarter growth of 8%, again in constant currency. Our total digital revenue is at 28% of our business. Our overall revenue has grown by 6% year on year and 2.3% quarter on quarter in constant currency. Our operating margin was at 23.7%. We had US dollars 1.1 billion of large deals in Q1, of which 40% were in financial services. And we had an increase by 4 clients to a total of 24 clients that are now over US dollars 100 million revenue in a trailing 12-month basis. Overall, we see a good demand environment across the US, Europe, and Asia Pacific. In terms of sector demand, we see strength in energy, utilities, retail, insurance, and manufacturing. In our agile digital business, we see especially strong traction for the work we're doing in cloud, in data and analytics, in IoT, and in the area of experience. Our 2 recent acquisitions, Brilliant Basics in the UK and Wong Doody in the US, are helping us expand our portfolio in the experience area and already starting to have an impact across our client base. We see continuing traction of our automation approach and our artificial intelligence platform NIA within our core services business. Our approach to progressively move our employees onto an agile platform is seeing good traction. In our localization program, we've launched a new 75-acre campus in Indiana in the US and are now planning 4 other locations in the US, 6 in Europe, and 3 in Australia. With a strong foundation of delivery, the focus on agile digital and AI-powered core services, we are now expanding our strong sales and go-to-market teams. With that, I feel we have a stable start to the year and are executing on our strategy and our 3-year transformation program. Let me now hand you over to Praveen, our COO.
No, I think we get into questions.
I'll have some. Yeah. Hi, good afternoon. We had a very broad-based financial performance on multiple fronts. Let me talk about some of the few key financial indicators. First of all, the operating margin. I'm happy to inform you that it is at 23.7%, pretty much near the higher end of the guidance that we gave in the beginning of the year, which was 22 to 24%. Our return on equity expanded and it crossed 25% at 25.5%. It's a high in several years. It was primarily an account of an efficient capital management, including the capital allocation policy that the company successfully executed during the year. Third, our free cash flow jumped over 30% sequentially to 552 million. That's very healthy. Fourth, of course, the EPS grew year on year 3.9%. And one of the key indicators that we watch as we execute our digital journey is really the per capita revenue, that is revenue per employee, that further increased for 12 quarters in a row on the back of productivity improvements, automation, and also larger share of digital services. During the quarter, as part of the capital allocation policy, we declared the final dividend. It was paid off to investors, and it amounted to 70% of the free cash flow as per the capital allocation policy. And as you know, as per the new policy that was announced in April 2018, special dividend of $400 million was paid out, and an additional $1.6 billion was identified by the board to be distributed for fiscal 19 in a method and a manner to be decided by the board. So overall, we had on multiple fronts a very broad-based financial performance.
Thank you very much for that. My name is Fatima Karan and I'm from Business Television India. I would like to show off about the fact that I've gotten the luckiest first draw in terms of the questions. Thank you for what you've just told us. The key question really, I think, just really expands on what you've said behind those numbers, which is basically you've maintained your guidance. And investors and analysts will be looking at the fact that there has not been an upward revision, so to speak. Your numbers, of course, are stable. So what exactly are you projecting in terms of your, if one was to describe it? I mean, the question would be, is there some kind of uncertainty that you're projecting there, or what is it that you're telling us? And secondly, of course, yours is, of course, very much a cash-generating company. Buybacks would be something that would be an obvious choice. A bonus, of course, is mainly something that's used for the balance sheet. So just give us a little more in terms of what you have, what you've announced there, and how would you like to explain it?
Yeah, on the clearly at the revenue and the margin guidance, I hope you're looking at the both. Let me look at the operating margin guidance. We gave at the beginning of the year 22 to 24%. And we also said, we'll be making certain gradual investments to leverage the digital opportunities, and we have begun to make that. So the first quarter, we closed at 23.7, pretty much near the higher end of our guidance. And during the year, of course, we'll continue to focus on both the operational efficiencies as well as the investments that we need to make hand in hand. Coming to the revenue guidance, we stated in the beginning of the year 6 to 8% in constant currency. And it was based on the visibility and the momentum that we saw, both in terms of the pipeline as well as multiple sectoral, the trajectory that we see. And we have delivered 2.3%, and on year, it is 6% in constant currency. And we'll continue to reiterate our guidance in 6 to 8. Of course, the deal wins, after 7 quarters, it has crossed $1 billion, of which again 40% is financial services. We continue to kind of execute our strategy during the course of the year. Let's see one more quarter and how it goes, and we'll continue to focus on that. Coming back to the capital allocation policy, as you know, last year, including the buyback of $2 billion, we returned $3.7 billion back to the shareholders. And this year again, the board has approved up to 70% free cash flow to be returned, and additionally $2 billion to be returned to the shareholders, over and above 70%, of which out of the $2 billion, $400 million we have already paid back in June by way of a special dividend. Balance $1.6 billion we'll be looking at returning in a method and mechanism to be decided by the board.